What is an FHA loan? What are the loan requirements for FHA? How much down payment do you need? What credit score do you need? How do you calculate mortgage insurance? What type of property can you buy? Can you turn your property into a rental? Can you refinance out of FHA? Is the mortgage insurance on there for the life of the loan? Well, those are the questions that we're going to answer in today's video, along with many others. As someone that talks a lot about FHA here on YouTube, I'm often getting the same questions over and over again. So what I wanted to do in today's video is take some time and address the most commonly asked FHA questions that I get when it comes to buying a home. And with that, you're going to walk away understanding FHA loans in more detail. And with that, you're also going to have a better understanding whether or not FHA is the right loan for you. But before we dive into today's video, I want to take a minute and ask a favor. If you find any value in my content at all, do me a favor and hit that thumbs up. Not only does it help the YouTube algorithm push it out to more people like you, it also shows me that you support the channel. And along with that, if you want to stay updated on everything real estate related, do me a favor and hit that subscribe button. So as I mentioned, I talk a lot about FHA here on YouTube, but one thing you need to understand is I'm not a mortgage broker. I don't do FHA loans. In fact, I'm a real estate agent. I help people buy homes. And the reason I talk a lot about FHA on here is to help people better understand it. I have no skin in the game when it comes to choosing the type of loan that you use. That's why I feel like I can just provide you the information and you can use it for what it's worth without thinking that I'm actually trying to sell you something. But with that, when it comes to FHA loans, there are often a lot of different questions because there are different nuances, different loan requirements. People look at them different ways. In fact, some people believe that FHA is a great loan while other people think FHA are bad loans. So what we're going to do today is provide you with the information so that you can make the best decision for yourself. And the very first question we're going to start with in today's video is a very basic one that I get all the time though, and that is, what is an FHA loan? An FHA loan is a loan that's backed by the government. Federal Housing Administration backs the loan. The government doesn't actually do the loans, they just back them. The loans are actually done by private lenders out there, brokers, banks, a lot of different people do FHA loans. So I often have people reaching out going,
Jeb, who do I go to get an FHA loan?
Well, typically speaking, you can go to a bank, you can go to a broker, you can go to a direct lender. All of them traditionally do FHA loans. But with that, some lenders have overlays on the program. So even though FHA, the federal government, says that these are the requirements, that lender can come out and say,
well, those requirements are a little bit too low for our standards. We're going to raise them a little bit.
And one of those credits might be credit score. Now, we're going to talk a little bit more about credit score later in this video, but let's just say, for example, FHA allows a credit score as low as 500. Well, a bank might put an overlay on that program saying,
well, I know FHA allows it, but we won't accept a loan any less than a 580.
For example. So just make sure when you're out there talking to lenders, you're talking to somebody that understands FHA loans. They're not trying to push you away from FHA because they don't understand it or push you away from it because they have some preconceived notion about it. When you get a quote from a lender, have them compare your option. Have them put an FHA loan beside a conventional loan, beside maybe a USDA loan if you qualify for it. And that way you have side-by-side comparison and can decide which loan is best for you. And that leads me into another question that I often get, asking, what is the difference between an FHA loan and a conventional loan? Well, the primary difference is FHA is backed by the federal government. Conventional loans are not. Now, there are some other nuances, differences in the programs like credit score requirements, mortgage insurance is a little bit different on these programs, down payments are a little bit different on these programs, and we're going to talk about that in more detail as we go through the commonly asked questions here, so just bear with me. Another question that often comes up are, what are the qualifications for an FHA loan? Now, the qualifications for an FHA loan are going to be a lot like any other loan program out there. You're going to have a job. You're going to have 2 years of steady employment. Now, with that doesn't mean you have to be on that same exact job for 2 years, but you do need to be in the same line of work. And that doesn't mean you can't have gaps in your employment, because you can have gaps as well. But this is where things get a little bit confusing in trying to explain this in a video, because a lot of different people have a lot of different situations, and it's really hard to just throw a blanket statement out there. So one thing I want to make very, very clear in this video is, don't take what I'm saying in this video and run with it and say, I'm approved for an FHA loan, or I'm not approved for an FHA loan, this sucks. Take the time and talk to a mortgage professional. Have them look at your credit scores, look at your income, look at all the documentation, and tell you whether or not you qualify versus just going off my video. This video here is giving you accurate information, but it's not the end all. So just make sure you're working with a professional. Now, one thing I didn't mention earlier when talking about lenders, if you need a lender, I've put a link in the description below to refer you to somebody I personally know, like, and trust that can guide you through that process. So again, if you want to talk to a professional, do me a favor and use that link. Now, going back to the qualifications, you need steady income. You need steady employment. You've got to have some money for a down payment in addition to having money for closing costs. Now, there are ways where you can get credits for these things, but these are basic requirements when getting a loan. And we're going to talk in more detail about the amount that you need for down payment, the amount that you need for closing costs here in just a minute. But I often have people reaching out going,
Jeb, I don't really have a job. I have no credit at all, but I want to buy a house. Well,
chances are you're not really in a position to buy a house if you don't have those things in place. You need to have, again, steady employment. You need to have some money in the bank. You need to have credit scores. You need to be paying your bills on time in order to be able to qualify for a loan, which is going to take me into the next question, asking about down payments. How much down payment do you need to buy with an FHA loan? Well, FHA requires a minimal down payment of 3.5%, which means if you're buying a $100,000 home, you need a $3,500 down payment. A $200,000 home, that's $7,000. A $300,000 home, that's $10,500. $400,000 is $14,000, and you can do the math from there. Now, that doesn't mean you can't put more money down, because you can with FHA. In fact, you can put as much down as you want, but traditionally speaking, if somebody is putting a ton of money down and buying a home, they're not using FHA, because there are typically better loan programs out there when you have a much larger down payment. And that is one of the differences in conventional and FHA. Now, conventional does have a loan option where you only have to put 3% down, but you need much higher credit scores in order to be able to do that 3% down payment. And more often than not, the payment is actually lower with FHA putting 3.5% down than it would be with conventional putting 3% down. So when you're comparing the two, FHA typically ends up being the better loan option for most people out there. But that's again why you want to get that comparison when you're working with a mortgage professional. So what is the maximum loan amount you can get with an FHA loan? Well, it's all going to depend on where you're located in the country. There are areas that are considered high cost areas, and there are areas that are considered low cost areas. The areas with big populations, Southern California, New York, parts of Florida, where real estate is typically a lot more expensive, those areas are typically high cost areas, where most of middle America, if you will, is considered a low cost area. Now, I will put a link in the description below where you can go and figure out whether you're in a high cost or a low cost area. But based on the low cost areas, these are actually the max loan amounts. Whereas if you're in a high cost area, these are the actual loan amounts. Now, one thing to understand about FHA is that these max loan amounts typically change every year. So depending on when you're watching this video, the loan amounts might actually be a little bit higher than what's on the screen, as they tend to revise these numbers sometime around Thanksgiving each year. Now, this is the question that probably comes up the most often, and that is, what is the minimum credit score for an FHA loan? Well, the minimum credit score is a 500 credit score. FHA actually allows a 500 credit score. But here's the caveat. That requires you to put at least 10% down. In fact, if you have anywhere between a 500 and a 579, you need to have a 10% down payment in order to even consider using an FHA loan. But if you have a 580 or above, as high as an 850, if you will, you can use an FHA loan, only putting that 3.5% down payment. Now, that's going to take me to another question around mortgage insurance, because the mortgage insurance is somewhat dictated by the down payment that you put down. When you put 10% down or more, that mortgage insurance is essentially going to fall off after the 11th year. So between years 1 and year 11, you're going to have mortgage insurance on that loan as long as you have that same FHA loan. Now, the difference is when you put less than 10% down, say you put 9.9% down, that means you're going to have mortgage insurance on that loan for the life of the loan. So it doesn't matter if you get 20% equity in the property, 50% equity in the property, you're going to have that same mortgage insurance on that loan for the life of the loan. But here's one of the cool things. You can always refinance out of your FHA loan into a conventional loan as long as it makes sense. So if you get to the point where you have equity in your property and interest rates are, say, lower, you're able to refinance into that conventional loan, drop the mortgage insurance, lower your interest rate, well then by all means, you can go and do that. In fact, FHA has its own loan program called an FHA Streamline that you can refinance into. And that's one of the questions that often comes up. And that's, what is an FHA Streamline? An FHA Streamline allows you to take your current FHA loan and refinance it into another FHA loan by streamlining the process. And the streamline is, there's no appraisal required, there's no income documentation required. So it's, hey, as long as you have an FHA loan and it makes sense for you to refinance, say because interest rates have dropped, you can take your current loan and refinance into another FHA loan with very, very little documentation, which is a huge plus because in some cases values could have come down. So maybe you don't have as much equity in your property. In some cases, maybe you're making less income or your credit score isn't what it was, and you're now able to use that FHA Streamline and still take advantage of the rates. But that only works with an FHA loan to an FHA loan. So if you go conventional and you want to refinance into an FHA, which you can do, you can't use a Streamline. And on the flip side, it doesn't work the other way. If you have an FHA loan and you want to go into a conventional, those are two different types of loan programs. So you're going to need to provide all of that documentation in order to refinance. So how is mortgage insurance actually calculated? That's one of the questions that often comes up. So what we're going to do here is we're going to do a quick mortgage insurance calculation, and we're going to use it based on a $500,000 purchase price. Now, depending on where you are in the country, you might go, Jeb, that's a crazy number, but that's the number we're going to use today because the calculations are relatively easy to do, and you can apply them to other loan programs based on this same calculation using more or less the same numbers. So a $500,000 purchase price using a 3.5% down payment, which is what most people do when they buy with an FHA loan. They're only putting 3.5% down, which is the minimum. That would require a $17,500 down payment. Now that's going to give you a loan amount of $482,500. But here's one of the catches. FHA has something called upfront mortgage insurance. Upfront mortgage insurance is required on every single FHA loan. Doesn't matter if you're putting 3.5% down, doesn't matter if you're putting 10% down, 20, 30% down, you still have this upfront mortgage insurance. Now, upfront mortgage insurance is something that can be paid out of pocket with closing costs at the end of the loan, or it can be financed into the loan, just added back to your loan amount, which is typically what most people do. And that percentage is 1.75% of this loan amount. So we take $482,500 and we multiply it by 1.75%, that's $8,443, and we add it back to that $482,500 loan amount, which gives us a new base loan amount of $490,943. And we're going to take that amount and we're going to multiply it by 0.55%, because this is the percentage that FHA charges for mortgage insurance. So once we take that and multiply it by that $490,943, it's going to give us $2,700. Now that's the yearly amount. So what we're going to do is we're going to divide that by 12, meaning that we're going to have to pay $225 a month in mortgage insurance. Now that is different than the upfront mortgage insurance premium, right? The mortgage insurance premium was that $8,443 that's required on every loan. The mortgage insurance, which is also required, is a monthly amount, and that is two separate things. So yes, you're going to pay the upfront and you're going to pay the monthly. And that monthly amount is added to your principal, interest, taxes, and insurance to get your total monthly mortgage payment. Now going back to what I said a moment ago, that amount is on your loan for the life of the loan if you put less than 10% down. If you put more than 10% down, then it will fall off after year 11. At any point in between there, 60 days, 90 days, 5 years, 7 years, you can refinance out of that FHA loan as long as it makes sense and get rid of that mortgage insurance. Again, it has to make sense in order to do it. Now we're going to take a step back here and address another question that I get often with FHA, and that's, are there any income limits with FHA? And the answer is no. You can make as much money as you want and still qualify for an FHA loan. FHA often gets the rap of being a first-time homebuyer loan program because they allow a minimal down payment, because they allow lower credit scores, but anybody can use FHA FHA. In fact, you could have owned multiple homes in the past and still use an FHA loan. So there is no income requirement on the upside. But on the downside, you have to be able to make enough money in order to qualify for the loan. Now, there's not an actual requirement. You don't have to make a certain amount, but you have to be able to qualify for the loan, which means you do need to be able to document your income. Now, how long do you need to live in the home using an FHA loan? Well, there's actually not a requirement, believe it or not. A lot of people out there say you got to live in it 1 year before you turn it into a rental. There's no documentation that says this is the time that you have to live in the property. In fact, when you sign your loan documents, you're signing an occupancy affidavit with the closing, basically saying that you're going to occupy that home within 60 days. It doesn't say in there that you're going to stay in there for X period of time, but there's kind of this unwritten rule out there that you're going to live in the property for at least a year before you turn it into a rental, if you decide to do that. Now, maybe you end up moving, you need to get relocated to another area, and you're wondering, can you turn that property into a rental? And the answer is yes, especially when you have a reason why you're moving and you're keeping that property. Now, another question that often comes up is, can you have more than one FHA loan at a time? And the answer is yes to that as well, but there is another rule here that it typically has to be at least 100 miles from your existing FHA property. And with that, it also has to make sense as to why you're buying that property in that area. You know, maybe you're getting relocated for a job. Like if you have a $500,000 home and you're looking to buy a $200,000 home 100 miles from there, FHA is probably going to look at that and go, no, I don't believe that that's actually the case. In some cases, you might actually have to prove why you're doing it. But to get back to the question is, yes, you can actually have more than one FHA loan at a time. Now, with that, one of the questions that comes up is, can I buy an investment property? Can I buy a second home with FHA? And the answer is no. FHA only allows you to buy a primary home. But here's the caveat. If you buy a duplex, a triplex, a fourplex, something that has multiple doors, multiple units, if you will, FHA still allows that. As long as you're living in one unit, you can still rent the other 3 units out, and you can actually use 75% of those rents in order to help you qualify for the loan, which is a huge plus when it comes to FHA. And another thing when doing that is they still only require that 3.5% down payment, which again is absolutely awesome. But here's the catch. Areas like Southern California, areas with high cost real estate, it's very, very difficult to do because it doesn't pass the self-sufficiency test that FHA requires in order to do just that 3.5% down buying multiple units. So depending on where you are, it may work, it may not work, which is another reason that you want to talk to a mortgage professional if you're considering doing that. And one of the last questions I want to end on today are, what are the closing costs when it comes to FHA loans? Well, here's the thing. I can't really give you a set amount saying that you need this dollar amount, because closing costs are not only going to vary by lender, by state, by loan amount, they're going to vary by a lot of different factors. But there are some things that are going to show up on every single transaction that you purchase, whether or not you get the seller to pay your closing cost or you have to pay them. There are things like title fees. Depending on if you're an escrow state, there are escrow fees. There are taxes due. There's recording fees. There's prepaid interest on the loan. There's multiple things that often have to be paid when closing on a loan, whether or not your lender is actually charging you closing costs. In some cases, your lender's charging you things like origination points, processing fees, just different things. So you also have that on top of the traditional closing costs. So I would say, depending on where you're located, you need somewhere between 2-4% probably of the loan amount. On top of that, you're going to have impounds with FHA, which means you're prepaying your property taxes and your homeowner's insurance on top of that. So again, it's going to vary by state, but I would say that you need somewhere between 3 to 5% in most places to be able to cover that closing cost on top of your 3.5% down payment. Now again, it's going to vary by state, which is another reason you want to talk to a mortgage professional. It could actually be less if you're able to get seller credits, if you're able to get lender credits. There are different things you can do to put yourself in a good position. There are different things you can do to put yourself maybe in a better position, which makes it very, very difficult to discuss on video without having a certain loan amount, a certain buyer profile, etc. Now, before we wrap up today's video, I want to reach out to you as the viewer and ask, What questions do you have that I didn't address in today's video? Do me a favor and put them in the comments. I will go back and actually answer the questions so that you have all the answers you need in order to make the right decision. Now, one favor I'm going to ask for you for doing that is that if you haven't done so already, do me a favor and hit that thumbs up, subscribe to the channel to stay updated on everything real estate related. And finally, if you want to go through the loan requirements, the official loan requirements of FHA in more detail, do me a favor and check out this video here.